Welcome to Comply on the Fly with M3 and Karen B, your trusted resource for quick, reliable insights into employee benefits compliance. Each episode delivers clear answers to common compliance questions. Whether you're tuning in for the first time or you're a seasoned listener, we're here every other week to make navigating compliance a little easier. Please note this podcast and the contents herein do not constitute legal advice. In all cases, employers should consult with their own legal counsel. Let's dive in.
Hello, everyone. I'm Karen B. And the Comply on the Fly topic for today is, yes, it is that time of year, 2026 PCORI fees. And as a friendly annual reminder, I will talk about what they are and how you pay them. PCORI fees are not new. They were included in the Affordable Care Act, or ACA, and were implemented in 2012. And for now, we have them until at least 2029. PCORI stands for Patient-Centered Outcomes Research Institute, and fees to fund this institute apply to fully insured and self-insured group health plans. The fees are due and payable by July 31st every year, so now is a good time to discuss how to go about paying them and calculating them. I'm never sure if this is reaching the right people, but I'm always surprised each year at the number of plan sponsors that simply don't realize they're required to pay this fee. If you are fully insured without any other self-funded plans, there isn't much for you to do. In fact, the fully insured carrier handles the payment of these fees on your behalf. But if you are fully insured for medical and have a health reimbursement arrangement, HRA, or retiree HRA, or if you are self-funded for medical, which could also include level-funded plans, captive arrangements, or ICRAs, you will need to pay the fees directly to the IRS if no one else is doing it on your behalf, which is most likely the case, but you could always check with the TPA or the captive. Employers that have an HRA integrated with a self-funded medical plan do not have to pay separate fees for both self-funded plans. Once you determine that you're required to pay, you need to understand what the fees are and how they are calculated. Fees will always be based on the specific plan year that applies to whatever self-funded plan you are paying for. This year, for plan years that end in the months between January 1 and September 30, 2025, the applicable fee is $3.47 per covered life. For plan years that ended between October 1st, 2025 and December 31st of 2025, the fee is $3.84 per covered life. For instance, a calendar plan year of January 1, 2025 to December 31, 2025 would owe $3.84 per covered life on the plan during that plan year. If you need to see a visual of plan years and corresponding fees, visit m3ins.com and type in PCORI to find our current article and chart. Now, in order to pay the fees, you will need to know the number of covered lives on the applicable plan during that time period as well. Please note that there are several different methods for determining the number of covered lives. First, the actual count method. This requires you to count the number of covered lives each day of that plan year and divide by the number of days in that plan year. Somewhat easier may be the snapshot method. This requires you to add the total of covered lives on a date during the first, second, or third month of each quarter of the plan year and divide by 4. All dates used obviously must fall within the same plan year. There is also a snapshot factor method, which requires you to look at individuals with self-only coverage and count them as 1, and then multiply the number of individuals with coverage other than self-only coverage and multiply that by 2.35 and then add those numbers together. And similar to the snapshot method, it should be done for 1 day in each quarter and then divided by 4. Finally, there is a Form 5500 method, which requires you to use counts from the 5500 filing for that applicable year. And here in this method, you add the number of participants at the beginning of the plan year and the number of participants at the end of the plan year for the total. It is important that if you are trying to determine the number of covered lives for an HRA, health reimbursement arrangement, you only count the participants or individuals, not all other potential covered lives such as spouses and dependents. Now, once you have that number of covered lives for the plan year, you will have to enter that number on Form 720, and that is an IRS form, which is a quarterly excise tax return. If you normally file quarterly excise taxes, this will just be part of your second quarter filing. If PCORI fees are the only item for you on Form 720, you will just fill out that section and file and mark that it is for the second quarter. The applicable section in Form 720 is Part 2, line 133 under, quote, applicable self-insured plans, where you will fill in the number of covered lives and multiply by the corresponding fee per covered life. Remember, for this year, it is either $3.47 or $3.84, depending on your plan year. The current Form 720 does not have the correct amounts listed, so keep checking for an updated Form 720. And that is your Comply on the Fly topic for today. Thanks for tuning in.
For more employee benefits compliance insights from Karen B. and her team, please visit m3ins.com.